Guys, this is S&P 500 weekly technical analysis for the week of October 7th, 2024. Now, if you notice, there was some struggle in the bearish side, but the S&P 500 managed to sustain because on the weekly chart, S&P 500, Dow Jones, Nasdaq, all of these indices are absolute bullish, as I have mentioned in my previous S&P 500 weekly technical analysis and also in my midweek update on Wednesday. So in my midweek update on October 2nd, Wednesday, I mentioned that there is a buying opportunity because as long as S&P 500 is trading in between these two trend lines, it will remain bullish. But because there are geopolitical tensions in the Middle East, that is why, although this is a buying opportunity, but I have advised my members to exercise some caution. And what will be the safe level to buy? It is 5695. What was 5695? It was the moving average. As long as S&P 500 is trading, sustaining, holding, closing above 5695, it is all bullish, bullish, bullish and nothing else. So if you notice, on Tuesday, S&P 500 closed above the moving average. On Wednesday, it came down to 5674 but retraced and then sustained and closed above the moving average. So this was my first update on October 2nd, 2024 to my Patreon community members, that because the closing was seen at 5705, which was above the moving average. So on Tuesday, the moving average was at 5696 level. So because it was seen above 5696, this means it is bullish. It will test the 573320 zone, and even if it struggles at 573320, then it is expected to remain in between 5696 and 5720 for the rest of the day. This was the movement. The high was 5720 on Wednesday, and then it spent a lot of time in between 5720 and the moving average. And on Thursday, in my first update, moving average was at 5698. And then on Friday, again we have seen S&P 500 came down, tested the moving average, and the most important part was this, the prediction that I mentioned to my Patreon community members. In the second half, S&P 500 is expected to spend most of its time either inside the zone. Inside the zone means 573320, or a little below. Little below means 5715, or a little above to 5745. And in the best case scenario, it can breach 5745 to what? 5750 resistance level, and we are not expecting any more bullish movement beyond this because the momentum was not there. And if you notice that on Friday, the high was 5753 and it closed at 5751. Now question is that why I am discussing the moving average, this kind of swing. The reason is that in the next week, this swing is going to play a very important role, and again the same moving average is going to play a very important role. And now that I have discussed the S&P 500 in detail, so I'm not going to discuss the Dow Jones in detail, but you can see the Dow Jones was sustaining strongly. Okay, on Thursday definitely there was there's a fear that it can come down heavily, but in the last 30 minutes, S&P 500, Dow Jones, Nasdaq, okay, all of these indices retraced, and Dow Jones closed above the moving average, S&P 500 closed above the moving average, and then these indices came into the sustainable condition. And then on Friday, all of these indices gave a heavy bullish cusp, or a heavy bullish candle. Okay, this indicates the continuation of the bullish movement on Monday, as simple as that. So guys, if you also want to get the midweek updates, which I give every Wednesday, and these midweek updates are very important. So what you can do is that either you can join my YouTube community or YouTube membership. This is the join button. And if you want to join through Patreon, then I've given the link in the description of the video and also in the comment section. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. First point of the agenda is the S&P 500 technical analysis on the weekly chart. This movement that you are seeing here, that it was coming down, and it was supposed to come down under this, the Middle East, okay, tensions were there on, okay, these the factors were there. But because the weekly charts were strong, very strong for the S&P 500 and also for the Dow Jones, that is why the S&P 500 and the Dow Jones managed to sustain. Okay, even though there was the bearish pressure, but because the weekly charts were strong, that is why the market sustained, right? And the best part is that on the weekly chart, it is a bullish candle, surprisingly, because yesterday on Friday, S&P 500 managed to move up and reach to 5750. Okay, this means simply bullishness. So weekly chart means the long-term picture for a month, okay, or so. Now comes the second point of the agenda. This is the S&P 500 technical analysis on the daily chart. On the daily chart, as you can see, it was coming down, sustained, kept closing on the moving average, and then moved up. So on the daily chart, it is clearly bullish. It seems bullish, but in actual, it is not, because on the daily chart, the S&P 500 has lost the support of the MACD. MACD is trading bearish. Stochastic RSI is trading bearish. Dow Jones, the same condition is there. This means that there must come a bullish candle on Monday. Otherwise there will be one more bearish side movement. Means one more swing in the bearish side. Okay. So I will discuss this thing in detail on this, the daily chart. Daily chart means the short-term picture, like for a week, for 2 weeks or so. Third and the last point of the agenda is the probable movement of the SP 500 from October 7th, which is Monday, to October 11th, that will be Friday. So just like what I mentioned here in my midweek update, that this fall is not actually a fall, but it is a buying opportunity. Okay, provided you keep a stop loss, because this fall is because of the Middle East tensions. So there will be a bearish breakout, and then only there will be back-to-back fall, or it will enter into the correction. But as long as it is trading in between these two trend lines, it is safe and it will be considered as bullish. That is why it is a fresh buying opportunity. So in a similar manner, I will tell you that what is expected to happen in the S&P 500 in the next week, and also in the Dow Jones and in the entire US stock market. But guys, let me remind you once again that all of these three sections are interconnected, are interrelated. And this means that if I'm discussing something here in the weekly chart, then it relates to the daily chart and the probable movement. So in a manner, I cover 20 to 30% or more than that, the probable movement in the weekly chart section and in the daily chart section, because I cover the candles, and candles are very, very important. Candles, and also these are trend line. And the rest of the part, 60 to 70%, I cover in the probable movement, third point of the agenda. That is why it is strongly recommended that you should watch all of these three sections in order to understand what is going to happen in the S&P 500 in the next week. Now guys, I am going to begin with the first point of the agenda of this S&P 500 weekly technical analysis. And this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Now, if you notice, this is the last candle. Okay, it's a good bullish candle, and just in last 1 hour, okay, S&P 500 managed to close above the previous closing, that was 5738, and the last candle it closed at 5751 as a bullish candle. So what does that mean? This means that the bullish movement, the bullish sentiments are expected to continue without any problem. Because if there would have been a red candle or a doji candle or a technical bearish candle, in that case definitely we would have anticipated some fall. See, this candle is not a heavy candle. This candle is not a heavy bullish candle, right? This means that it supports a continuation of the bullish movement. But this does not confirm any gap up open. No, this does not confirm any gap up open. Okay, this simply says that even if there comes a fall, then also S&P 500 will be in a condition to recover that fall. However, when we talk about the Dow Jones, this is the chart of the Dow Jones. This is the last candle of the Dow Jones. This is the weekly chart. Okay, weekly candles. So again, weekly candle means one candle means 1 week, not 1 day or 1 hour. This weekly candle of the Dow Jones is much stronger, as compared to the weekly candle of the S&P 500. Why it is much stronger? Number one, closing is above the previous closing. Okay. Number two, there is a long tail. Number three, and the most important part, is the shape of the candle. It looks like a bullish hammer or a bullish cusp. Okay, this does indicate a gap up open on Monday, or irrespective of any open, means even if there comes a gap up, okay, or a gap down, then also either intraday Monday or any day including Monday, there will be the bullish movement. Okay, so this candle is much stronger as compared to the S&P 500, this bullish candle. So now bullish candles of the S&P 500 and the Dow Jones are signifying the continuation of the bullish movement. Now let's talk about the technicals, because technicals are very, very important here. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these very, very important midweek updates which are published every Wednesday before the open of the stock market, you can either join my YouTube channel or YouTube membership, or alternatively, you can visit my Patreon page, my Patreon profile. You can subscribe to any of these 3 tiers and you will be getting the midweek updates. However, if you are looking for these daily precise updates of the S&P 500, which I give to my Patreon community members every day from Monday through Friday, then you can subscribe to any of these 2 tiers. Now, in terms of the technicals, moving average is clear fan out, closing is above the moving averages. So S&P 500 is bullish through the moving averages on the weekly chart. S&P 500 is bullish through the Bollinger Bands on the weekly chart. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. Now the most important part, the bullish crossover in the MACD. Now, this MACD was supposed to give a bearish crossover if there would have been a closing below 5688. However, the closing on Friday was at 575751. So it has actually saved the S&P 500 from entering into or from going into the correction. Okay. So now MACD is clearly bullish on the weekly chart. Stochastic RSI is bullish on the weekly chart. The bullish momentum will be generated by these two. That is why I am saying, irrespective of anything, okay, as long as everything is under control, as long as Middle East situation is not deteriorating, okay, the market will remain bullish, not a problem. So, and on the weekly chart, it is neither overbought nor saturated. This means S&P 500 on the weekly chart will be considered as 100% bullish. Very, very simple, 100% bullish. Now, this is the Dow Jones. Again, the same picture, same clear phenomenon in the moving averages. Dow Jones is bullish through the moving averages on the weekly chart. Dow Jones is bullish through the Bollinger Bands on the weekly chart. Dow Jones is bullish through the Ichimoku cloud on the weekly chart. And Dow Jones is in much better condition as compared to the S&P 500, because MACD is heavily bullish and stochastic RSI is also bullish. So again, the bullish momentum will be generated by these two, okay, and any fall will be handled by these two. And and also it is neither overbought nor saturated. This means that the Dow Jones is also 100% absolute bullish on the weekly chart. Best part is that both of these, the indices, S&P 500 and Dow Jones, are neither overbought nor saturated. Now comes the question. So the question is that, because it is 100% bullish, Dow Jones is 100% bullish, this means that now there will be a gap up open and continuously there will be bullish. No. This 100% bullish movement says that irrespective of anything, see, just like what we have seen in the last week, okay, so you should notice, we have seen that S&P 500 was struggling, was coming down, okay, and then it managed to retrace, it managed to move up. This was because of the 100% bullishness of the S&P 500 and the Dow Jones. right? So now the S&P 500 and the Dow Jones is 100% bullish. This means that even if there comes any fall, then also the market will remain in a position or in a condition to recover, to retrace. And this is exactly the same thing I mentioned in the previous S&P 500 weekly technical analysis and also in my midweek update. But in the midweek update, I have also mentioned the levels, okay, in order to play safe. So this is what it means, 100% bullishness, that even if there comes any fall, then also it will be able to sustain and then it will be moving up. Okay, it will be able to recover. So guys, before I discuss the daily chart, I have this important information to share with you, that these are the 3 products that I offer. This is the 4 stock market hacks with 90 to 95% accuracy. This is the 8 stock market hacks plus modified technical indicators with 90 to 95% accuracy. These are the options trading, premium calculator, premium strategies, everything, real-time calculations. Okay. So when I say this, the 4 stock market hacks or the 8 stock market hacks with 90 to 95% accuracy, I mean that accuracy is almost 100%, but still I am keeping 5% just the margin of error. Otherwise it works 100% of the times. And these are the hacks or these are the strategies that you might not have ever heard. And if you have patience and also if you are aware about the technicals, then 5% to 15% monthly basis or even more than that, okay, you can generate through or because of these the hacks. So now the question is that what you are going to get through these the hacks. You will be able to predict whether there will be a red candle the next day, tomorrow, or whether there will be a green candle. Or you will be able to predict whether there will be a gap up open tomorrow or a gap down open. You will be able to predict whether there will be an instant fall, intraday fall, or whether there will be an instant bullish movement or an intraday rise or a heavy bullish movement. And also on a particular day, there will be a fall, 100% certain, there will be a fall. And also there are some conditions which will give an instant fall, 5% to 10% fall, or an instant rise, 5% to 10% rise. So now in order to access the products, I have given the link in the description of the video and also in the comment section. And these products are listed on my Patreon page. So when you visit my Patreon page, my Patreon profile, then you will see that there is a shop option. When you click on this, the shop option, or when you scroll down, so when you scroll down, then you will see that under the shop option, there are these 3 products. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Now, if you notice, this is the last candle. It's a strong bullish candle. Why it's a strong bullish candle? There is a long tail. The closing is approximately equal to the high, but it is not equal to the high, just approximately equal to the high. And it is a bullish hammer. Okay. And all of this indicates continuation of the bullish movement and also a probable gap up open on Monday, or irrespective of any open, an initial bullish movement or an intraday bullish movement on Monday. Okay, this is what the candle signifies. See, on Friday, one thing was very much clear, that now irrespective of anything, the S&P 500 is expected to remain bullish. Why it was supposed to remain bullish? Because in my second update, I mentioned that now in the second half, SP500 is expected to spend most of its time either inside the zone or a little below or a little above the zone. And also through the same update, it was pretty much clear that the S&P 500 is going to close above the moving average. So 1, 2, 3, 4 closings above the moving average means bullish. Okay, bullishness was supposed to be there, right? And this is the chart of the Dow Jones. And when I analyze the chart of the Dow Jones, if you notice, again a long tail, and then a strong bullish hammer. Okay, the same condition. It is not exactly equal to the closing is not exactly equal to the high, but it is approximately equal to the high, indicating a gap up open on Monday, or irrespective of any open, an initial bullish movement or an intraday bullish movement, and also the continuation of the bullish movement. So guys, now let's talk about the technicals. But before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now comes the technicals. Clear fan out in the moving averages, and the most important part, closing is above the moving averages. This means S&P 500 is bullish through the moving averages on the daily chart. SP500 is bullish through the Bollinger Bands on the daily chart. SP500 is bullish through the Ichimoku cloud on the daily chart. Now comes the problem. This is the problem. Okay. There was a bearish crossover in the MACD. This means that if there comes a good or a heavy bullish candle on Monday, then we can anticipate that MACD will give a bullish crossover. If it fails, if there comes a red candle on Monday, then the divergence will increase further in the MACD. If there comes continuously one or two red candles, or if not red candles, then thin green candles but not heavy green candles, then again the divergence will increase because the MACD will remain bearish. This means that although market is allowed to move bullish, but because of this bearish MACD, there will always be a fear of a sudden fall, surprise fall. But because on the weekly chart, S&P 500 and Dow Jones are absolute bullish, this means that this sudden fall or surprise fall will be contained, will be restricted, and will be recovered. Okay. But if, see, stochastic RSI is showing signs of bullish crossover. This means if there comes a thin red or green candle or a proper green candle on Monday, then stochastic RSI will give a bullish crossover. Once that happens, then this sudden or sharp, this fall, okay, it will be contained, restricted. However, if the stochastic RSI remains bearish, then bearish stochastic RSI, bearish MACD, so there will be a bearish side momentum. And then there will be fall. There will be some more fall before it can actually be, or before it can actually be recovered. So on Monday, if you are my Patreon community member, then I will tell you, okay, probably in the first or second update, that whether this is happening or not. Okay. So this is with the MACD. So now this means that through the MACD, S&P 500 is bearish on the daily chart. Okay, very, very simple. Through the stochastic RSI, S&P 500 is bearish through the stochastic RSI on the daily chart. Again, it is neither overbought nor saturated. This means that on the daily chart, S&P 500 is 50-50. Simple, 50% bullish, 50% bearish, because the bearish side momentum is there because of the MACD and the stochastic RSI. Whereas if I talk about the Dow Jones, clear fan out in the moving averages. Dow Jones is bullish through the moving averages on the daily chart. Dow Jones is bullish through the Bollinger Bands on the daily chart. Dow Jones is bullish through the Ichimoku cloud on the daily chart. And again the same problem, exactly the same problem. Bearish crossover in the MACD. And if you have subscribed to my YouTube channel for last many months or years, repeatedly I mentioned that MACD always gave a linear movement. Linear movement. Okay, means it doesn't change for many days or for many weeks. Okay, this means that now there must come heavy bullish candle on Monday. Okay, especially on Monday. This is okay, very specific. Monday there must come a heavy bullish candle. Okay, because if there won't come a heavy bullish candle, rather a thin candle or a red candle, then the divergence will increase in the MACD. This increase in divergence will create problem for the entire US stock market, because this is not just happening in the Dow Jones, this is also happening in the S&P 500. And the stochastic RSI of the S&P 500 is trying to give a bullish crossover, but the stochastic RSI of the Dow Jones is not in that condition. This means that Monday there must come a good or a heavy bullish candle. I'm not saying that 100% it will come. No, I'm simply telling you a condition that if there comes a heavy or good bullish candle, then the MACD may give a bullish crossover, and if the MACD fails to do so, then at least the stochastic RSI will give a bullish crossover. And when the MACD will be bearish, stochastic RSI will be bullish, then the bearish momentum which is there, it will be cancelled. It will simply become neutral and it will follow the trend. What is the trend? Bullish. Simple. This means that any fall, any sudden fall, any surprise fall will be contained, restricted, and there will be a condition of the recovery. Okay. So here on the chart of the Dow Jones, again, okay, it is 50-50, and at the same time it is neither overbought nor saturated. But whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500 if you are my Patreon community member. And if you are not, then let me tell you that I give these daily precise updates every day from Monday through Friday, pre-market update before the open of the stock market in detail. Then first update, then second update, then final update. And along with these updates, I also give these the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 every week. And along with the stock market opportunities and the daily updates, I also give the midweek update every week on Wednesday. So if you're looking for all of these, then you can join my Patreon community. And I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon community. And on my Patreon page, there are these 3 tiers or 3 levels. This one is all midweek update videos. So the videos which I post every Wednesday before the open of the stock market, so that you can watch the videos, you can make your strategies, and you can understand what is going to happen on Wednesday, Thursday and Friday very, very precisely. If you subscribe to this, then you will be getting only the all midweek update videos. Okay. And these 2 are the daily S&P 500 updates every day. So when you subscribe to either of these 2, okay, the only difference is the geographical difference. When you subscribe to either of these 2, then you will be getting all midweek update videos as well as the daily SP500 analysis updates, probable movement, levels, zones, momentum, everything, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, and they are getting these the midweek updates, daily precise updates, pre-market, first update, second update, final update, and also the stock market opportunities in the premium stocks. So guys, whenever you want to join my Patreon community in order to get these benefits, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda. And here I will give you the probable movement of the S&P 500 for the next week, means from October 7th, which is Monday, to October 11th, that will be Friday. So next week there are the events, not much, but on Wednesday the FOMC minutes, okay, it will be released, and these minutes will tell us whether Feds are planning to give more relief, means rate cuts or not, okay, etc, etc. Then comes a Thursday the CPI data, the inflation data will be published. This means that Thursday will be very, very crucial here, because recently we have seen that non-farm payroll data was much better as was anticipated by the Wall Street. No one was actually expecting this kind of a strong labor market data. And also the unemployment rate, which was moving up, okay, for last 2-3 months, came down slightly, okay, and it was at 4.1%. okay. So this has now raised a speculation that if the economic data again comes stronger, then Feds, who are supposed to give more relief, they might not give this relief. Rather, they will simply wait and watch. Anyways, whenever the data will be published, okay, I will give you the detailed analysis, okay, to my Patreon community members. And now, Now in terms of the movement, so in terms of the movement, what we know is that these are the trend lines. As long as S&P 500 is trading in this section, means in these in between these the two trend lines, okay, it will remain bullish no matter what. It will remain bullish irrespective of anything. Okay. Also, if it remains around here, okay, spend some good time, and the all-time high was 5768, which was also my calculated resistance level. Whenever it breaches the 5768, because it will have to, if it is coming to hit that trend line, then it has to breach the 5768, otherwise it will not be able to hit that trend line. So once it moves up and hits the trend line, then we need to wait to see if there is or if there will be an actual bullish breakout or not. Because only if there comes a bullish breakout, means there comes two back-to-back closings above the trend line, bullish breakout, then it is free to move up. Next comes 5790, then more and more levels in 5800. Okay. However, it moves up, breaches the trend line, but gives closings below the trend line. In that case, this will not be considered as a bullish breakout. This will be considered as a failure or rejection. Okay, a failure or rejection from here will force the S&P 500 to come down. Come down to what? Come down to test the lower trend line. And also you need to understand, see, this is how it should work. It should first move up, try to regain or try to give bullish breakout through this trend line, and if there comes failure, rejection, then it should come down to this trend line. Okay, so this should be the flow, right? However, if something happens like Middle East tensions, okay, if the situation further deteriorates in the Middle East, in that case what will happen? In that case there might not come this kind of a smooth bullish movement, rather S&P 500 may remain reluctant to breach 5768, and it can come down from here only. Now whenever it comes down from here, in that case the moving averages will provide the necessary cushion, and because these are the moving averages, okay, means the value will change every day. So if you are my Patreon community member, then I will mention the value every day in the updates. Okay, and depending on the closing above or below the moving average, the market will move accordingly. Okay, then in that case moving average will be able to hold the fall. Okay, but a rejection from the trend line will force it to come down to test the trend line. Okay, however, a rejection before the trend line, before it hits the trend line, it will be contained, or it is expected to be contained or to be restricted to the moving averages, and it might not hit or test the lower level trend line. Okay, and the rest will depend on the movement on Monday, Tuesday, Wednesday or so. Okay, and also on the Middle East conditions. But this is technically true. This is technically true. This is the first movement, this is the second movement. Okay, now let's talk about the Dow Jones. But before that, guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now let's talk about the Dow Jones. So Dow Jones situation is a little different. Okay, and the situation here in case of the Dow Jones is that the trend line range is very narrow. It is very, very narrow. Although there is one more trend line here, okay, somewhere around here, but that will come into the picture only if the Dow Jones breaches this the lower level trend line. So because the trend line range, okay, or this trend line zone is very narrow, this means that even before the S&P 500 can give us a bullish breakout or a bearish breakout, the Dow Jones will be able to give us a bullish breakout or a bearish breakout. and then looking into the Dow Jones, looking into the chart of the Dow Jones, okay, we can plan our trades. So through the Dow Jones, we will track whether S&P 500 is going to move up or it will be coming down. Simple. Again, the same condition. If there comes two closings above the trend line, bullish breakout. If there comes two closings below the trend line, bearish breakout. And this range is very, very narrow, only 1%, approximately 1%, 0.9%. Okay. So these are the conditions here. Now, this is the Dow Jones. Okay, one more thing. If there comes a bearish breakout in the Dow Jones, then there will be a failure at the moving average. And if you notice that for last many days, it was sustaining, okay, at this the moving average. And at the same time, it will fail at the trend line. This means that bearish side movement will be heavy or is expected to be heavy because of these two failures. Okay. Whereas in the bull side, the bullish side movement might not be heavy because there is no moving average, nothing, only the all-time high level. Okay. This means that if there comes a bullish breakout, in that case, the bullish side movement might not give a sudden 2% or 3%. Because in that case, the market will wait for the S&P 500 to give the bullish breakout. Once S&P 500 gives a bullish breakout and also the Dow Jones has given a bullish breakout, then the indices will be in a condition wherein we can anticipate more bullish movement. And that will be the condition wherein we can anticipate 5,800 or above in the S&P 500. Okay. But in the bearish side, a failure will be it will be very, very heavy, or it will weigh heavily on the markets, because see, in the same condition, S&P 500 is also in the same condition. Okay, the moving average was giving it the required support. Okay, once these the moving averages are gone, okay, then only the trend line can hold. Okay, and because Dow Jones will give a bearish breakout, so in that case, there will be heavy chances that S&P 500 will also give a bearish breakout, okay, in the bearish side. Now this is clear. Okay, now, okay, one more thing. Yes, it is about the rejection. The rejection I have mentioned earlier, this rejection, before we can see that rejection in the S&P 500, we can see that rejection in the Dow Jones. If you notice, this was the rejection, this was the rejection. Okay, and on this day I clearly, very clearly mentioned to my Patreon community members, especially on this heavy day, this is the heavy fall, that now any moment, any time, Dow Jones will give up, and when the Dow Jones gives up, then entire market will come into that. This is the condition. Anyways, so rejection means, okay, this kind of rejection. But any rejection for now from here, again, there may come a breach. Breach is not a problem. Problem will be the closing. If there comes a closing below that trend line, then a rejection from here should be handled by that trend line. There may come a breach in the bearish side, but a closing above that trend line will help the Dow Jones to hold. Okay, and then it will trade in this narrow range of just 1%. Okay, two closings below the trend line, two closings above the trend line, bullish breakout, bearish breakout. Very simple. And now remember, whenever there comes the bearish breakout condition, then what will happen? In that case, S&P 500 will be losing to 5,600, around 5,600. Why? Because the trend line is very near to the strong support zone, which is around 5,600. This means that as long as S&P 500 is trading in between these two trend lines, it will be considered as bullish and nothing else. Okay, this will be seen as a fresh buying opportunity. But because the Middle East tensions, okay, no one knows what is going to happen. That is why the buying opportunity, it comes with risk. And in order to cover risk, you are advised to use the stop loss. So that if the Middle East tensions, the Middle East situation deteriorates, okay, heavily, and the oil prices move up heavily, okay, and also the gold will move up heavily, then the market will fall suddenly and heavily. In that case, if you have stop loss, okay, then your stop loss will hit and you are out. Okay, but as long as this condition is there will be the bullish condition only and nothing else. As simple as that. But whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500 every day from Monday through Friday if you are my Patreon community member. And if you are not, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. And also you have an option to join my YouTube community, YouTube membership if you're looking only for the midweek update videos. So there is this the join button. You can click on this the join button and you can join my YouTube community or YouTube membership. But if you are comfortable here at Patreon, then the same option is there. And also you can get the same midweek update videos by subscribing to this tier on my Patreon page. Okay, but if you are also looking for the daily analysis, updates, movement, momentum, levels, zones, stock market opportunities, then you can subscribe to any of these two tiers and you will get the midweek update videos, daily analysis and stock market opportunities. So guys, hit like if you have liked this video and subscribe to my YouTube channel if you have not yet subscribed. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section. And also once there comes the candles on Monday and Tuesday, then on Wednesday I will give you the midweek update video and I will tell you, okay, in that the video, all of these, the conditions, bullish, bearish, levels, zones, okay, the moving average value and everything. So guys, this was my S&P 500 weekly technical analysis for the week of October 7th, means from October 7th, which is Monday, to October 11th, that will be Friday.